Oliver, UBS, now one of Europe's biggest banks, the Swiss bank, came out with its third quarter numbers today, and they weren't very good. And the shares are down 7%, I think partly because of a regulatory warning that they need to be a little more prudent in terms of risk-weighted assets. But can you explain really what's going on here?
So yes, the shares down 7% today, not a well-received set of results, and there's two parts to that really. The first is the numbers themselves that weren't great, big drop-off in fixed income trading. That's not unusual, that's been the case across the industry for the third quarter, so that's to be expected. Also wealth management, not a great sort of growth story at the moment. This is where UBS is really concentrating its strategy on wealth management, but over the first 9 months of this year it's barely grown its profits at all. So that was the first part of it, but more importantly is more bad news from the regulators for UBS. This time it's the Swiss regulator changing its ruling on the assets that UBS has, the effect of which is to reduce its capital ratio by 130 basis points. So it's not great. Now UBS is making some of that up with capital gains elsewhere, but overall its capital ratio isn't quite where everyone thought it was.
What's it going to do about it longer term then?
Well, over the long term, it's got to deal with what the regulator says it has to do, and it'll stick with its strategy. And to be clear, its strategy had been quite well received. It unveiled its strategy a year ago, and the idea is that it shrinks its investment bank quite a lot and focuses on wealth management. And it's making progress towards that. It's shrunk the assets in the bank overall, but also particularly in the investment bank. So it's going to carry on doing that and sort of stick to its guns, but it has to deal with what the regulator tells it to do.
Do you think this will have implications for other banks who may have been considering going the way UBS has? I mean, does it cast any wider implications for that sort of strategy for the market generally?
Possibly, and we saw Credit Suisse last week when it had its third quarter results. It too set up a non-core division and said it would shrink its investment bank, albeit on a much smaller scale than UBS. What does perhaps have wider ramifications for banks generally today is that UBS has said it's looking at its foreign exchange business. We've had regulators in Switzerland and the UK and elsewhere looking at the foreign exchange market. UBS says it's looking internally at what its foreign exchange division has been doing, and that might spread to other banks, and there's the risk that might turn into a LIBOR-type investigation.
Well, it's an interesting set of results with interesting implications for others. Thanks very much, Oliver.